reported a 14% decrease in full year headline earnings per share. What is your response?
The turnover reduced by 6%, and that was mainly as a result of rain delays, contract awards that were also delayed, and then also some contracts that were cancelled, and that had an effect on the headline earnings as well. I think for this year it's down. Going forward, we're quite excited about our order book, because year on year, as we stand here today, exactly a year ago, there's almost a 30% growth in the order book. So we see that the earnings going forward should not really go down. It should be sustained or even have some positive growth.
Now, you have a large percentage of your client base, which is public sector. Obviously, you're impacted by government delays in contract awards and cancellations. How are you tackling this problem?
I think it's important for government to put contracts to the market, because the infrastructure need in the country is quite big. Like ourselves, 40% of our turnover is dependent from public works, and most other construction companies are also dependent on government work. Although there's still a movement in the private sector, I think it's of paramount importance that government they actually do get their act together and put contracts out to the market, because it will create employment, and the country will only benefit with a better infrastructure.
Now, you mentioned early on your order book currently stands at 8.2 billion rand. The competition is quite fierce.
The competition is still very fierce. Some of that is as a result of the delayed awards of projects, and some especially in the mineral market, where we're very active in the private sector. We have had a number of awards in the mineral sector, also awards from Transnet on harbour work, and then some work on mine expansion, open pit mining. So it's a good spread. So I would say it's quite a good quality order book. Most of the order book is in our business units that actually provide us with an operating profit more than the average that we currently have of 6.4%.
Now, tell me about your project portfolio outside of South Africa. Has this been the key in the company's relatively steady profit performance?
Turnover from outside South Africa, as we stand today, is approximately 23%. Operating profit from outside South Africa stands at 30%. So it's always been very profitable for us to work outside South Africa, and we will continue to do so, and we certainly trying to increase our presence in the countries where we are currently active, and also try and increase our footprint into the rest of Africa.
And you are currently in the Middle East. How are you reading the market in the Middle East at the moment, and for how long can you continue treading water there?
We're quite excited about the Middle East. We've recently signed an agreement with a local company to joint venture with them in Qatar, and they've been awarded the World Cup, Soccer World Cup in 2022. The infrastructure spent in Qatar is going to be quite a lot, and also the World Cup projects. We certainly believe that could be a good market for us. We've been operating in the Middle East for a while, so we are familiar with conditions there, and we're looking forward to that challenge.
You published a cautionary announcement earlier this year. How do you expect, when do you expect these negotiations to be wrapped up?
The negotiations should be wrapped up within the next 4 weeks.
And is there any further information you can give us on these negotiations?
We're under cautionary, so I can't really tell you much about that at the moment. Yes, but it's something that will certainly help the business to grow even further.
Just to go to those numbers again, the headline earnings per share down 14.2%. Your board has adopted a prudent dividend policy. Is that going to be the policy in the future?
We can see good organic growth and good acquisitive growth in the group. We're also expanding geographically, and we need the funds to expand the business. Going down from a 3 times cover to a 4 times dividend cover, I think it's the right decision that the board has made. And also you must understand that between management and our BE partners, in excess of 60% of the shares belong to that grouping. And they see the benefit going forward, and they will also, if one sees pain in this, there's little pain as far as we're concerned, but there's definitely opportunities that we will see the benefits of this going forward in time to come.